In this video, traders, I want to talk about the winning trader's mindset. Stay tuned. Hey guys, warm welcome to you. Thank you so much for joining me. Okay, so I've known a trader called Hippolito Hip. He trades YM and crude oil exclusively. Also kind of talks about tape. Tape reading is really his thing. And so he dissected the tape the other night, talking about depth of market, time and sales, and how that integrates. But one of the things that stood out for me was the way he talked about risk. And this was subconsciously. He didn't actually think this definitely, or should I say, it wasn't a conscious thought, it was subconscious. So this guy's been trading, I think, over 10 years now, maybe it's even 12 years. So he's experienced in the market. As I say, very exclusively trades YM and crude oil, uses depth of market, uses the footprint, has his own style. But one thing he said, I thought this is so interesting. When he talked about risk units and he shared about how he kind of scales out of positions and how he thinks in terms of risk units and how he carries over those risk units the next day. So one thing he was saying was, okay, maybe off the top of my head, he's saying I used 3 risk units for the day, for example. And I'll have 1 risk unit per trade, 3 trades a day, max 3 max losses for the day. But if then, let's say he makes 5 risk units on that day, that carries that over and says to himself, okay, well, I've got 5, 6, 7, 8 risk units now. Not that he'll risk 8, but it's the way he framed it in his mind was he carries that over and it allows him to kind of lose the 3 and still be up the 5 on the week. And then he carries that over and he hopes to get another couple of risk units and he hopes when the week up 10, 12R, whatever it may be, 15R, whatever it may be. But it was the way he framed it that really caught my attention. And I thought, that's interesting because I think in a similar way about the markets, or about equity curve, should I say. So imagine equity curve A, okay, and equity curve B, identical, right? So when you are a newer trader, when you start to make some money and get some traction, and this is, you can imagine this is going up in terms of dollar amount, and this is time across your x-axis. When you're at the high there's a fear that you will draw down. And what often happens with traders, and it's happened to me in my early years, as I say 15, 16, 17 years ago, when you get to draw down there, you really want to be back to your highs, your equity curve highs. And you're thinking, I just want to get back to highs, I want to get back to highs. And all you can think of is that and end up degrading your performance. And sometimes that can result in prolonged drawdown before you kind of get a grip of yourself and push back up. Now, a more experienced trader, just like Hip last night, thinks in terms of a drawdown at some point is inevitable. It might not be now, it might be double what I've got here, but it's inevitable. And the way that I view, or the way that he views his equity curve is that it just buys him a bit more cushion for the inevitable drawdown and then inevitable pushback to highs. So it's framing it in a very, very different way to many traders. And I thought, he doesn't realize he's doing this, but this is exactly how I think, and I know that other experienced traders think. We may have a good equity run, equity curve might be at highs, you're happy about it, of course, you're human, you're like, yeah, well, that's what my job is to do, is to make money and to push that equity curve to highs. But it's framed differently. It's like, okay, the higher it goes, the quicker it goes. That's nice to get that little Billy bonus, good week, good month, and get a good push in equity curve. But it's knowing that that is going to draw down at some point, and knowing that that big acceleration, if you like, or that big win, or that big kind of equity curve growth, all that does is create a bit more of a cushion to kind of prepare for the drawdown when it inevitably comes. And it might be a couple of trades, it might be a week, it might not be even drastic. But it's a very different way of framing it than many traders at the beginning of the career, like I say, who maybe have that boost in equity curve and they then go into defense mode. I really don't want to take it back from highs. It's a nice number. I like looking at that P&L. I like this, and they feel good about it. And then, of course, when you do draw down, because trading guys, you have losers, obviously, they can't handle that, and the stress is like, I need to get back to highs, I need to get back to highs. So it's framed differently. The experienced trader knows there's inevitable drawdown and packages those big growth periods in a way, hey, that's a great cushion for inevitable drawdown. It's going to kind of be able to weather the storm much easier. Just like Hip was talking about, hey, you know, if I get a 2R on this day, 5R, then I'm on 8R, then I've got basically thinking in terms of risk units that he has left, even though he hasn't lost those next three. He's thinking in terms of that, thinking, well, worst case scenario now, I'm up 10R and it's Wednesday. I've got Thursday to trade and only risk 1R on Friday, which is one of the things he does. Okay, well, best case scenario now, I'm going to be up 6R. And so he kind of thinks that in that way in his mind. And that's really interesting. And so perhaps if you are, or if you've been in a kind of situation where your equity curve has pushed up higher and higher and higher, and you kind of like it, and then you really struggle and end up doing this kind of reversal or back lower, maybe reframe a little bit about how you think about the equity curve. Maybe reframe and say, okay, that's great. It will draw down at some point. We hope it doesn't. We hope it just carries on in a straight line upwards, but it's not the way it works. And the drawdown just means the higher we go in the equity curve means that the drawdown is going to be less significant. You know, if you'd imagine that you'd be happy if you had half that growth, all of a sudden if you've got an extra 50% on that, you could draw down half of that little extra bit here, and you're still way higher than you were. And so it's thinking in terms of that and saying, okay, well, that's going to happen, and as long as I can get my together and push back up again, then fine. And so maybe consider that. Maybe consider thinking risk units. Maybe consider thinking about where your equity curve would be at the end of the week if you lost 2 days out or 3 days out of 5. You know, how would that look? And then kind of visualizing that in your mind, so you're not surprised when you do have a big boost in equity curve and it starts to come back and go, oh, I didn't expect that, I didn't like that, I didn't feel that great about it. You know, expect it and reframe your mind to perhaps help you weather that storm a little bit better. All right, guys, take care. See you next one. Bye bye.